Since August 3rd, 2026, the way India's biggest stocks close for the day has completely changed. And if you trade F&O, you've probably already felt it. Sudden closing price gaps, expiry days that don't behave the way they used to, and honestly, a lot of trader anger online. This is SEBI's closing auction session, CAS. In this video, exactly how it works, what's actually gone wrong in the first few weeks, and what you need to change about how you trade. Before CAS, the closing price of a stock wasn't just the last trade of the day, it was the VWAP. Volume weighted average price of every trade in the last 30 minutes from 3 to 3:30 pm. Why not just use the last trade? Because it's easy to distort. If a stock trades between 1000 rupees and 1010 rupees all day, one small trade at 980 rupees right at 3:30 shouldn't define the official close. VWAP smooths that out. But VWAP has its own weakness. Since it's an average spread across 30 minutes, a well capitalized trader can still place a cluster of late trades to nudge it, especially in lower liquidity names. And this closing price isn't cosmetic. It feeds F&O settlement, index computation, and mutual fund NAVs. SEBI's fix: replace the 30-minute average with a proper call auction where all orders get pooled and matched at one equilibrium price. The same approach used on the NYSE, Euronext, and other major global exchanges. Here's the mechanism, step by step. This applies only to Category 1 stocks, those with active F&O contracts, roughly 150 to 200 names. Every other listed stock, Category 2, still closes at 3:30 pm the old way. For CAS eligible stocks, the day from 3 pm looks like this. 3 to 3:15 pm, normal continuous trading continues, while the exchange simultaneously calculates a 15-minute VWAP that becomes the reference price for the auction, anchoring a plus or minus 3% band. 3:15 to 3:20 pm, a transition window. Continuous trading stops, no new orders are accepted, and the exchange finalizes the reference price. Any existing open orders carry forward, except stop loss orders, iceberg orders, and anything outside the 3% band which get cancelled. 3:20 to 3:25 pm, order entry session 1. You can place, modify, or cancel both market and limit orders. The exchange shows you an indicative closing price and the buy or sell order imbalance in real time. 3:25 to 3:30 pm, order entry session 2. Only limit orders now. You can place or modify these, but market orders are frozen and can't be cancelled. To stop last second gaming, this window closes at a random, system driven moment between 3:28 and 3:30 pm. 3:30 to 3:35 pm, the exchange matches everything at the single equilibrium price, the price where the maximum volume can execute. That becomes the official close. F&O contracts on these stocks keep trading until 3:40 pm and a post-close session runs 3:54 pm. One important clarification: index options, Nifty, Bank Nifty, Sensex options are not themselves put through an auction. They keep trading continuously. What changes is that the index value itself is built from constituent stocks, many of which now close via CAS, so the index's official closing level can move differently than it used to, even though the options on it trade normally till the end. This is the part that's been dominating trader Twitter, so let's get into it. On the very first Nifty expiry after rollout, August 4th, the closing auction produced a jump of roughly 150 points away from where the market was trading just before 3:15 pm. Traders who were pricing options based on the pre-auction level got blindsided by where the actual settlement landed. That kind of gap matters enormously for option sellers because their whole strategy depends on predictable time decay into a known close. When the final 15 minutes become what one trader online called a blind window, no visibility into where the auction will land, sellers have to price in extra uncertainty, and there's been real discussion of options showing less premium decay than usual heading into expiry, since the market is now pricing in the risk of a closing auction surprise. Reported proprietary trading desk volumes are down roughly 50% since CAS went live, as market makers say they can no longer offset positions instantly the way they could in continuous trading. They may have to carry inventory into an auction whose outcome they can't see coming. And this frustration turned into something bigger. Retail traders organized a no trade day boycott campaign for August 12th, 2026, with thousands posting screenshots of empty order books to protest CAS alongside broader complaints about frequent rule changes and high transaction taxes. A genuine structural concern behind all this. India's cash market volume in the closing window is far smaller than its derivatives volume, and short selling is restricted. So, critics argue well capitalized players could move a stock's auction price while holding an offsetting derivatives bet elsewhere. SEBI hasn't responded to this specific claim. It's contested, not settled fact. Practically, here's what changes for your order flow. Limit orders placed before 3:15 pm and not yet filled carry forward into the auction automatically with higher time priority than fresh orders placed during CAS. But if you modify one during the auction, price or quantity, it loses that priority and goes to the back of the queue. Stop loss orders and iceberg orders don't carry forward at all. They're cancelled the moment continuous trading transitions into CAS at 3:15 pm. If you were relying on a stop loss to protect a position through the close, it's gone. You need to manage that risk manually before 3:15. Orders outside the plus or minus 3% band get auto rejected, not queued. And if you use intraday products like MIS, brokers have moved auto square off times earlier for CAS eligible stocks. Don't assume your old cutoff still applies. Intraday and F&O traders. Your effective last chance to act on continuous orders is now 3:15 pm, not 3:30. Plan exits earlier and don't rely on stop losses to carry you through the close. Option sellers specifically. The predictable decay you're used to near expiry has gotten less reliable, at least in these early weeks. Price in the possibility of a real gap at the close, especially on expiry days for CAS eligible underlyings. Index option traders, Nifty, Back Nifty. Your instruments still trade continuously, but the index's official closing level can now shift due to constituent stocks going through their own auctions. Long-term investors and index. ETF holders. Minimal day to day impact either way. You're rarely trading in that 315, 335 window, and passive funds should actually benefit from a cleaner, harder to manipulate closing number over time. Since August 3rd, 2026, CAS replaces the 30-minute VWAP close for roughly 150,200 F&O eligible stocks. Continuous trading stops at 3:15 pm. A structured four-phase auction runs to 3:35 pm. F&O trades till 3:40 pm. Stop loss and iceberg orders don't carry forward into the auction. Manage risk manually before 3:15. The August 4th Nifty expiry saw a real approximately 150-point closing surprise, sparking a retail trader boycott on August 12th. Index options keep trading continuously, but index closing levels are affected via constituent stocks. Non-F&O stocks are unaffected, still closing at 3:30 pm as before. This is step 1 of a bigger overhaul. The pre-open auction gets aligned with these same rules from September 7th, 2026. Bottom line, if you actively trade F&O, the last 15 minutes are no longer a place to improvise. Plan your exits before 3:15 and expect real closing price uncertainty until this system stabilizes. That's the closing auction session, what it's supposed to fix, and what's actually happened since it went live. If this helped clear things up, hit like, subscribe for more breakdowns of market rule changes as they unfold, and let me know in the comments, did you take part in the August 12th boycott, or has CAS actually worked fine for you so far? Thanks for watching, and I'll see you in the next one.